Welcome to the January 2025 HPT Cross Data Review. This is my absolute favorite time of the month because this time of the month is where we really solidify this edge. We dive into the trades we took, the examples, we collect the data, now it's time to study it. Everybody a part of my teams know how much I love data. Data is the only way for you to develop a confidence and a presence in the market that's going to allow you to execute appropriately. Think about it. You're all over social media and you see these extremely successful traders. You have to ask yourself, do they have some golden edge under the sun that just prints them millions of dollars? Absolutely not. They have repeatability. They know how to execute. They know a strategy and it works for them. Well, this is the purpose of this data review. Is to develop a very clear strategy that works for you, and you know it works for you because of the data. Men lie, women lie, numbers do not lie. Numbers represent principles and patterns. If we could learn to study these principles and adopt these patterns and execute them appropriately, we will have a beautiful edge in the market. So before you are going to see a high performance trader document called a high level summary. For anybody that wants these high level summaries emailed to them on a monthly basis, click the link below. The link below will bring you to my website where you will then subscribe on a monthly basis to these data reports. This is a completely free resource, and the main reason I'm doing it is because what it's done for me. I'm trying to build a team, an army that executes appropriately every single day in the market. And I truly believe the only way to do that is by knowledge, is by helping traders understand an edge, a very simple edge, a very repeatable edge, and then helping them execute it daily. So subscribe to our links below, get involved, join our team, take the next step, and make 2025 the best year of your life, right? So before you're going to see set up the HPT Cross month tested January, win ratio 75%, right? It's beautiful. Required specifications, open print, right? And so number one, clarity is key. Until you're clear on what you're supposed to be doing, you're never going to develop repeatability. And I think we can all agree repeatability is the only way to get repeatable, consistent results. So the first step criteria is identify open print. Open print is one of the 5 pit numbers that we watch every single day. So every single day at 9:30, the opening price, the open print price, this is the level we're looking to watch, right? In the example here, you could see 607.50. Number 2, the moving average cross. Very simple. The 5 and the 21-day EMA shift. Now, for all premium members, you have access to my team and all my resources. Therefore, you have access to the EMA cloud on TOS. So you're going to see every time the EMA cloud turns from red to green or from green to red, this is the shift we are looking for, right? So number 1, critical level. Number 2, EMA cross. Number 3, the RBI or GBI entry. Very simple, red bar, been ignored. Once it has been ignored, we enter the market, stop below the RBI or GBI, right? So open print, moving average cross, RBI, GBI, long entry, stop below, target upside targets. Now, for these trades to meet our specifications, there must be at least a dollar move in our direction of favor, and it must be before noon. I'm trying to focus on the market open, just once again, bringing structure to this unstructured environment, right? So this is a beautiful example before you. We had 16 trades this month, 4 losses, giving us a 75%. Now, something we're doing a little bit different now that we've been collecting data for this long is a large data review. So this is a more of a context on the strategy for the last 5 months. The insight this gives us is insane, right? The more data we collect and the more data we analyze, the more things we learn, the more knowledge we obtain, the less ignorant we are while trading in the market, right? Look at this. September, 72% win ratio. October, 72% win ratio. November, 85% win ratio. December, 73% win ratio. January, 75% win ratio. So altogether, we took 88 trades. 66 of them were winning. 22 of them were losses, giving us a 75.86% win ratio. Now, what does this tell me? Yeah, it tells me the strategy works. It performs. But what I've discovered over doing this for the last 5 months is this strategy is only as good as your ability to execute it. If and when you make one mistake, if you rush it, if you enter too quickly, if you break character, the strategy no longer applies. You must be patient. You must implement all 3 steps. Otherwise, this data makes no sense, right? This is a very important concept that we must learn if we want to actually become repeatable in the market, right? So it's a beautiful thing, but only beautiful when implemented properly. So the purpose of these videos is to help us learn when to pull the trigger, what bad trades look like, what chop looks like, and just other ways for us to identify when our edge is actually present. And this is why clarity is key. All right, so let's break into it. First trade of the month was a loss, right? I love it. Price was very erratic here in the morning. You can see open print is this yellow line right here. Price rallies above it, right? And what's really cool about this is there was no upside criteria, right? We had open print, we had the moving average cross. Our first red bar was never ignored, therefore there was no long trade. And this is why when I say this strategy has been fine-tuned in a way that's going to keep you from trading chop, keep you from making irrational decisions, right? It's going to keep you grounded. This is what I'm talking about. Because until all 3 steps have presented themselves, there's no reason to put on a trade. And then price rallies up here into previous day high, rejects. We finally get a green bar here that was ignored, so we take it short, stop above the green bar. We get stopped out, price continues to move, so on and so forth. This was what I call a healthy loss. This was accounted for. This is just how the strategy works, and it didn't work on this trade. But I was overall very proud of me and the team in our ability to still trust the strategy and come back the next day. Because look at what we seen the next day. Beautiful trade right here. Open prints established. That's that blue line. We get that red bar. It's been ignored. How do we know it's ignored? The moment the high of this red candle gets obliterated, disrespected, at that moment we enter into the trade, right? It's that simple. We don't wait for a candle to close. We don't complicate it. Stop complicating things. Instead, become very clear. Once we break the high of that candle, we enter the market long, stop below it, and we call a beautiful move here. All right, next trade right here. This one was kind of hard, but you can still see all the criteria still presented itself. You have open print, price fell below it, comes up for a retest, and then we get a green bar that's been ignored off open print, causing the moving averages to happen afterwards, right? This was a very tough trade, but the criteria was still there. And this is what we have to do as traders. We have to learn it's not always going to be a perfect setup. It's not always going to be perfect. And this is the thing. If it's not, don't trade it. If you feel uncomfortable with it, or if you feel like it's not presented itself, don't take it. Go back, study it. Ask yourself, did this actually meet the criteria? If so, check. If not, keep moving forward. All right, so what day is this? 1/8/2025. This was another loss. All right, so this is our second loss. Open prints established. We get the moving average cross. You can see that red downward arrow right there. We get a green bar here that was ignored, right? So my strategy presents itself. I got to take it. I go short, stop above this green candle, and I get wicked out of the trade. Now, this is the thing. It's going to happen. We could sit here and go, oh, but it was coming into previous day low. It was that. No, don't ever not take the setup just because of critical levels there. I've taken tons of these setups, 88 to be exact, in the last 5 months. And yes, you can find ways to overcomplicate this, but there is nothing in the required specifications telling you not to take the setup if there's a critical level close to you, right? I don't allow external factors to keep me from taking my setup. My setup only works, my strategy only works if I execute it appropriately, right? So if and when I see the 3 steps, I enter the trade. Yeah, sometimes it works. 75% of the time it works. 25 it doesn't. So it's up to you to manage those 25 losses, or those 4 losses, and then manage those 12 wins accordingly. We cannot overcomplicate this, guys. Us as traders, right? We think this is a hard game, so we have to overcomplicate things. Don't be that trader. Be the trader that's very simple, very clear. If you see your edge, you take it. That is it. There's no question. It's not up to you to move the market. It's up to you to execute your approach, right? So this was our second loss. This same exact day, price comes back up to open print. We get an RBI off open print. We took a long play, captured a beautiful move to the upside, right? Allowing the law of averages to work in our favor. All right, this was a cool one right here. Open prints established. Sellers try to come in. Large green candle here, ripping through open print. Next bar comes back down, tags the previous red candle. We get a nice rally off the 50 EMA for extra confirmation. Take the market long, stop below the red candle. Price rallies up to previous day low. This one was beautiful. But this trade took a lot of patience. Check it out. Open print established. Price falls below the open, but we have no GBI, right? We have open print, we have the moving average cross, but there is no green bar ignored. And notice, without the green bar ignored, there's no follow through. So you guys probably heard me before talk about healthy trends, unhealthy trends, right? This is what I'm talking about. There's no GBI here, so there's no continuation. Coincidence? I think not. See, we have to learn what a healthy trend looks like. Healthy trends have GBIs. They have RBIs. It's literally showing you the opposing side losing. It's showing dominance in the momentum of the market. Therefore, if I do not get the RBI or GBI, I do not take a trade. It is not negotiable. I don't care what it looks like. I don't care what my emotions are telling me. I stick to the strategy. Price comes back up to open print and we start to sell off. Once again, there's no green bar ignored. And thank God, because if I entered short here, this probably would have stopped me out. Maybe it wouldn't have, but it wouldn't have been repeatable, right? Once again, we need that repeatable approach if we want those consistent results. Price rallies up to the 50. We finally get a GBI here, a green bar, been ignored. We enter short, coming right into end of day, right? Once again, this is a critical level. This is a pit number, and we're shorting into it. What if buyers show up? What if this? What if? I don't care about the what ifs. Instead of what if, ask yourself even if. Even if buyers show up, my stop's above this green candle. Why do I think buyers aren't going to show up? Because buyers, if they were strong, wouldn't allow this green bar to be ignored. We literally took this short coming into end of day, and then we added to the position once we got the next green bar that was ignored. This was a beautiful trade. And notice, it's respecting the EMA cloud. Yeah, there were some buyers there, but we stuck to our guns and captured a beautiful trade. All right, let's skip through here a little bit. I want to dive into another loss. All right, so here I think is our third loss on 121.25. Open print established, price rallies up, rejects some level. You can see we're getting some choppy price movement here. We're getting across here, across there. And then we finally get the green bar that's been ignored. We take it short, stop above it, and then we get stopped out of the trade. I got stopped out of the trade on this candle. It's going to happen. Once again, it's part of the game. It doesn't matter what else was going on. By the notes here, we could see price was below the 1 hour 9, which means I'm looking to trade with trend. That's completely fine. Just didn't work in our favor. But then once we got stopped out of that trade, look, we got stopped out of the trade right there on this green candle. The strategy then presented itself once again. Price comes into open print. We reject open print right here. Is very important, right? I need you guys to see this. We rip into open print. We reject open print. The candle we ripped into open print on, you can see we got the moving average cross. Then we get the red bar ignored. We enter long. Notice none of these red bars were ignored. Therefore, no trade. If you can learn and actually develop that mental resilience that keeps you patient and you actually wait for the RBI or GBI, notice you always are on the right side of the market, right? You have a way higher chance of capturing a move in your favor. Stop has to go below the red candle before it. And notice, price may come down and retest it, but buyers prevailed. The RBI GBI process is the most important part to this strategy. Not saying it trumps them all, right? But in my past, in my experience, I used to rush setups constantly. I used to get caught in chop, and then I used to overtrade. It's a very common issue with all traders. The RBI and GBI entry criteria, the process, will change all of that. If you can actually remain patient and allow the market to weed out all the impatient traders, and you actually wait for the RBI or GBI, these are the trades you're going to be taking. Really good setups. Now, this was our last loss for the month. This was last Friday. We were live on Discord. I remember it. Price rallied here in the morning. We got we're above all-time high, right? So we're currently, it's 2025 January. We're trading at all-time highs. Trump's back in office. The market's ripping. We rally above all-time high, and now we come down below it. Now, price falls below it. We finally get a green bar ignored with the moving average. We go short, stop above it. Now, we were actually, our first target was previous all-time high, but it was 50 cents away. Up here in the required specifications, you're going to see I'm looking for a dollar move in the appropriate direction. I was up around 22% ROI on this SPX trade. I told everybody in the trade this is a great spot to take profits. I was willing to hold this a little bit longer because I wanted to actually execute on the data we've collected, right? So this ended up turning out to be a loss because we did not take profits accordingly at previous all-time high. That was the level we were shorting into, 609.04. Buyers showed up, so on and so forth. Then comes into the last week we just had, which was a phenomenal week. One of the best weeks I've had in the last couple years. Open print established. Once again, very clear entry criteria that we were executing on flawlessly. Open print, price sells off. Once again, if you struggle with FOMO, adopt this strategy and you will never have that issue again. All right? Price sells off. No RBI or GBI, therefore no trade. No entry. And look at how beautiful. Look at it. Literally, if I would have went short here, I literally would have held, and then price would have retraced on me and stopped me out of the trade. Once again, keeping us away from shitty, choppy market conditions. Excuse my language. Price then rallies up to open print. We get the moving average cross. We get the RBI, red bar, ignored, enter long. Fucking fun, phenomenal setup right there. Look at that. Beautiful. Beautiful. Next trade. Oh man, 130. This day was amazing. Caught 2 setups this day in the morning before 12. Absolute beautiful. Now, this one is very unique. You're going to see we have open prints established. Hold up 1 second. Open print is established at 604, give or take. Price sells off below it. And then on the second 5-minute candle, we ignore the red candle. Therefore, that's my entry. Moving average cross took place, right? We're above the 50. In this candle, this open print candle that has massive, vast amounts of volume, tons of sellers, just got disrespected. Therefore, I'm going to enter the market long, put my stop below it. So it's a beautiful entry. It literally took us 6 minutes to get in this trade, 7 minutes from the market open, but we did not hesitate, right? We targeted 605.50, capturing a $1.50 move here. Absolute beautiful. We took profits at our target. Why? Because we were over almost $1 away from the 9D EMA. If you guys want more information on that, go on my YouTube and search 9D EMA. It's extremely important, and it will change your life. So once we captured that beautiful move to the upside, we allowed price to do its thing, right? We didn't become irrational because we know it works. What works? Repeatability, execution, right? So price now falls below open print. We get that beautiful green bar right there that has just been ignored. How do we know it's ignored? Once again, the red candle after it, wiping out the bottom. We enter short, stop above it. Look at this beautiful move. Our first move, we took all the way down here where we exited the position because of how the extension on the moving average. And then when price came back up to open print, you can see we got another green bar here. Ignored, entered short, stop above it. Absolute beaut. And now to finish the month, 1/31/2025, you're going to see we took this live on Discord with our team. Once again, you want to join our team, click the links below, right? Phenomenal team. But we were trading live here, and we caught a beautiful, once again, simple example of this strategy. Open print, moving average cross, red bar, ignored, long, stop below it, capturing a $2 move to the upside. Right? So guys, if you take anything from this video, let it be in the last 5 months, this edge has given us, what is it, a 75% or 76% win ratio, right? And learn to trust the strategy. Don't trust you. Don't trust your emotions. Don't trust your intuition, not when it comes to the market. Trust the numbers. Trust the strategy. Execute the strategy. Become a trader that's focused on repeatability, and your life will change. I'm Joshua Salvetti. Like, share this to somebody that needs to see it. Learn to make data-driven decisions. I love all you guys. I'll see you in the next lesson.